The decision-making frameworks of the world's wealthiest leaders Elon Musk, CEO of Tesla and SpaceX, Jeff Bezos, founder of Amazon, and Warren Buffett, CEO of Berkshire Hathaway, offer a masterclass in leadership, innovation, and resilience. While their industries and philosophies differ dramatically, their approaches to risk, opportunity, and crisis reveal patterns that transcend sectors. Musk's audacity in pursuing interplanetary colonization, Bezos's relentless customer-centric innovation, and Buffett's disciplined value investing exemplify distinct yet effective strategies. This analysis explores how these leaders navigate uncertainty, allocate resources, and steer their organizations through turbulence, providing insights into the mindsets that drive extraordinary success. Elon Musk, the architect of disruption. First principles and existential bets. Elon Musk's decision-making is rooted in first principles thinking, a method that strips problems to their fundamental truths, bypassing analogies or conventions. When founding SpaceX in 2002, Musk faced skepticism about private space ventures. Rather than accepting the status quo where rocket launches cost $65 million, he deconstructed the problem. Raw materials for rockets, aluminum, titanium, were only 3% of the price. By vertically integrating manufacturing and reusing rockets, SpaceX reduced costs by 90%, enabling missions to Mars. Musk's risks are existential. He invested $100 million of his PayPal fortune into SpaceX and Tesla, nearly bankrupting himself during the 2008 financial crisis. When Tesla faced production hell with the Model 3 in 2017, Musk doubled down, sleeping on the factory floor to meet targets. His willingness to risk personal and corporate collapse for transformative goals, renewable energy, multiplanetary life, defines his leadership. 2. Prioritization. Musk prioritizes moonshot opportunities that promise systemic change. At Tesla, he shifted focus from luxury EVs, Roadster, to mass-market models, Model 3, accelerating the auto industry's electrification. At SpaceX, the Starship project aims to colonize Mars, a goal that prioritizes long-term survival over short-term profit. Resource allocation is ruthless. Musk eliminates redundancies, merges supply chains, and reallocates talent to critical projects. During the Model 3 crisis, he diverted engineers from Tesla's solar division to the Fremont factory, emphasizing survival over diversification. 3. Crisis management. Musk thrives in chaos. During Tesla's 2018 production hell, he bypassed bureaucratic layers, making real-time decisions on the assembly line. His transparency on social media admitting mistakes, rallying public support builds loyalty but also invites volatility, e.g. the 2018 funding secured tweet that led to SEC charges. Crises are reframed as learning opportunities. SpaceX's early rocket failures, Falcon 1's 3 crashes, were publicly analyzed, leading to iterative improvements. Musk's mantra, failure is an option here. If things are not failing, you are not innovating enough, embodies resilience. Jeff Bezos, the calculated futurist. 1. Risk-taking. Bezos's philosophy, always day one, embraces perpetual experimentation. Amazon's 1997 shareholder letter declared a focus on long-term market leadership over short-term profitability, a strategy enabling bold risks like AWS 2006 and Prime 2005. AWS, initially a side project, now dominates cloud computing with 32% market share. Bezos mitigates risk through diversification. Amazon's two-pizza teams, small autonomous groups, test ideas cheaply, scaling winners, Alexa, and discarding failures of Fire Phone. His $1.4 billion investment in Rivian, 2019, hedged against Tesla's EV dominance, exemplifying strategic optionality. 2. Prioritization. Bezos prioritizes customer obsession as a growth engine. Free shipping, Prime, one-click purchasing, and customer reviews built trust, driving recurring revenue. The flywheel model, lower prices, more customers, scale, lower costs, creates self-reinforcing loops. Opportunities are evaluated through a long-term lens. Amazon Web Services, AWS, and Fulfillment by Amazon, FBA, emerged from internal needs, then monetized as services. Bezos's 2013 acquisition of The Washington Post reflected a bet on the media's digital future, not immediate returns. 3. Crisis management. Bezos confronts crisis head-on. When the New York Times exposed Amazon's toxic workplace culture in 2015, he emailed employees, "The article doesn't describe the Amazon I know, but pledged to investigate." During AWS outages, Amazon publishes postmortems detailing causes and fixes, rebuilding trust through transparency. Operational flexibility underpins crisis response. COVID-19 spiked demand for Amazon's logistics. Bezos redirected $4 billion to expand fulfillment centers and testing for workers, balancing profit with social responsibility. Warren Buffett, the sage of Omaha. Risk-taking. Buffett's mantra, rule number 1. Never lose money. Rule number 2, never forget rule number 1, guides his aversion to unnecessary risk. He invests within his circle of competence, favoring industries with predictable cash flows, insurance, utilities, consumer goods. The 2008 financial crisis saw Buffett invest $5 billion in Goldman Sachs, securing favorable terms, 10% dividends, due to his reputation as a lender of last resort. Buffett's margin of safety, buying undervalued assets, limits downside. His 1988 Coca-Cola investment of $1.3 billion capitalized on brand resilience during market dips, growing to $24 billion today. Prioritization. Buffett prioritizes businesses with durable competitive advantages, economic moats. See's Candies, acquired in 1972, thrives due to brand loyalty and pricing power. He avoids tech until Apple in 2016 due to rapid obsolescence, preferring boring sectors like railroads, Burlington Northern, 2009. Management quality is paramount. Buffett delegates to CEOs like Geico's Tony Nicely, trusting their expertise. His letters emphasize integrity. We can afford to lose money, even a lot of money. We cannot afford to lose reputation, even a shred of reputation. Crisis management. Buffett's calm during crises is legendary. The 2008 crash saw him pen a New York Times op-ed, "Buy American. I am." By 2009, Berkshire invested $26 billion in companies like Dow Chemical and Mars Wrigley, profiting as markets recovered. He avoids panic-driven decisions. During the 2020 pandemic, Berkshire retained $137 billion in cash, waiting for elephant-sized acquisitions. While criticized for inaction, Buffett's patience reflects his adage. The stock market is designed to transfer money from the active to the patient. Musk, Bezos, and Buffett exemplify distinct yet effective decision-making paradigms. Musk's first principles thinking and risk tolerance pioneer new industries. Bezos's customer-centric experimentation builds enduring ecosystems. Buffett's disciplined value investing compounds wealth sustainably. Their approaches to risk, opportunity, and crisis reflect deeper philosophies. Musk's urgency to secure the future of humanity, Bezos's infinite day one mindset, and Buffett's reverence for time-tested principles. For leaders, their lessons are clear. Align risks with purpose, prioritize relentlessly, and transform crises into catalysts. In an era of volatility, their strategies offer a roadmap for navigating uncertainty with vision and grit.